Hi, good evening, everyone. Welcome to our US market overview. I'm Allan Tan from Phillip Securities from the US Night Desk, and today joining me will be my colleague Ming Jun from the UK Desk. So in today's webinar, if you have any question, please feel free to use the Q&A function that can be found at the bottom of your screen. You can start typing in your question during the webinar, and we will reply to your question at the end of the whole session. So tonight at 2 a.m., the Fed will release its FOMC October statement, and this will be another important FOMC as for the past two FOMC, the Fed has moved to cut the Fed fund rate by 25 basis points each time. So will there be another rate cut tonight? In today's webinar, we'll be looking at some of the US data release and event that happened leading up to tonight's FOMC and discuss the likelihood of a third rate cut tonight. Also, we will be looking at the video gaming sector and provide some recommendation in the later part of the webinar. Later on, my colleague Ming Jun will be discussing about the latest events surrounding Brexit, and he will also be sharing on some technical analysis on counters that you guys are interested in. So if there's any counter or stocks that you all want him to do some technical analysis, just post it in our Q&A function. So what has happened during the past few months in US? The US Fed has cut rate twice, and the US continue to see low unemployment rate. And stock markets such as the S&P and Nasdaq are trading at almost all near-time high. The unemployment rate continued to be at a record low of 3.5%. However, there is a weakening of the ISM US manufacturing data, which came in at 47.8% in September. This is the lowest since June 2009, and this marked the second consecutive month of contraction. New export order index also tanked to 41%, lowest since March 2009. This shows that the prolonged trade war between US and China is starting to affect the US manufacturing sector. So if the manufacturing figures was expected, there are, however, an unexpected decline in the US retail sales, which might suggest that the consumer economy could be cracking too. Retail sales fell for the first time in 7 months, and this raised fear that a slowdown in American manufacturing sector was spreading to a broader economy. And for the trade war, the US and China trade war issue does seems to be improving according to some positive information coming up this month, with both parties making positive comment on getting a partial deal signed soon. So a recap of what had happened in the last two FOMC. Following the first rate cut in July by 25 basis points, the US Central Bank made another rate cut in September by another 25 basis points to a range of 1.75 to 2%. So members of the FOMC were much divided on what action the Fed should take moving forward, with 5 members wanting to hold the rate, while 5 others supported a total of 2 rate cuts this year, and the remaining 7 members want at least one more rate cut in 2019. So the Fed did indicate that inflation is still running way below their 2% objective, which currently is at about 1.7%. And following his comment of a mid-cycle adjustment in the July FOMC statement, in his September statement, Chairman Powell described the 25 basis point rate cut as a move to provide insurance against risks threatening the current economic outlook. So next, we will look at the unemployment situation in US recently. This chart shows us that the unemployment rate for the past 10 years, and we can see that the unemployment rate has dropped from a high of 10% in 2009, and in September, the US unemployment rate has dropped to a 50-year low of 3.5%, with job growth increasing moderately. From this, we can see that the strength of the US economy, even though the US-China trade war issue has been ongoing for months. Given the current strength in the US job market and the loosening of the monetary policy, we do think that the US will face a major do not think that the US will face a major recession any soon, despite the trade tension that are affecting the manufacturing and the retail sector. So next, moving on to trade war development. In recent weeks, there have been an improvement in the US-China trade relation. For example, the Office of US Trade Representative granted tariff exemption for more than 400 items imported from China. This is a sign that US is also making effort to reduce tension between the two countries. Also, just last week, Trump did indicate that he expects to sign a partial trade pact with China as long as it is the right deal, and expect the deal to be signed in November. This phase one of the deal will see Trump agreeing not to proceed with a hike in tariff from 25% to 30% on almost 250 billion worth of Chinese goods. So therefore, we can see that relationship between the US and China is definitely improving. So for tonight, October FOMC, market consensus are that there is a 90% chance that there will be a third rate cut and by 25 basis points. However, taking a contrary view, I would argue that a third rate cut is not a foregone conclusion. There is still some chance that there will be no cut tonight due to some recent positive development as we have talked about. Take for example also, the Chicago Fed President Charles Evans, who previously supported the last two rate cuts, have come out to focus that there will be no more cut in 2019. He has indicated that the current rate and policy is appropriate, even though the US economy is softening, but is still in good shape. Two other committee members has continued to support the no cut rate view. This official opposing further loosening in policy expressed concern over the financial imbalance that have occurred as inflated prices in risk assets like the stock, which is trading at a new high level as we speak. As seen in the previous slide, US unemployment rate is also at a record low of 3.5% with a healthy job growth in the economy. So in the Fed view, it has already developed 3 rounds of stimulus this year. Firstly, it has reversed costs from its planned hike rate last year. Secondly, it has stopped reducing its balance sheet and begin increasing its balance sheet gradually. Third, it has already cut rate twice by 25 basis each time. Therefore, we believe that there will be some chance that the Fed will not cut interest rate tonight for October FOMC, as the Fed will want to see the effect from the past two rate cuts filter through the economy before taking more action. We should not see any more rate cut this year if the economic data such as manufacturing and retail sales start to improve and the stock market remains strong. However, if data start to grow uglier and market turn for the worse, then we will get to see another rate cut likely in December. Okay, moving on. Formerly, when people talk about the gaming sector, most of us will think of it as an investment in the casino stocks. However, today we'll be presenting into another kind of gaming investment. That is the video gaming sector. Yes, you can actually invest and make money out of video gaming stocks. And some teenagers are even full-time gamers making millions of dollars just by playing video games. Thus, today we will look at some details on why we should start to add video gaming stock into our portfolio and what are the ways we can invest into this industry. So according to Newzoo report, so for those who are not sure about Newzoo, it is one of the global leader in games and esport analytics. So in their report, they indicate that the global revenue of the gaming market is expected to hit 180 billion in 2020 and 300 billion in 2025. From the charts on your screen, you can see that the console and PC market are expected to grow steadily for the next few years at 2.3 and 3.1% respectively. While we will be expecting an explosive growth of almost 27% in the mobile gaming sector, represented by the upper blue bar. The game market is on track for a decade of double-digit growth of about 11% a year. With such a growth rate, the gaming industry is definitely a very attractive sector to look into. So here are the 5 reasons why we should consider investing in the video gaming industry. So one of the main reasons is due to the fast expansion of video gaming in the global markets. In the past, main video gaming markets are in the North America, Europe, and Japan. However, in the past decade, we have seen a rapid expansion in other major markets like Japan, China, India, and Southeast Asia. In 2018, gaming revenue from China itself is 38 billion, 28% of the world spending on gaming. With the transformation of gaming sector to online, coupled with rise of esports and mobile gaming, the penetration into the Chinese market will act as a long-term driver for gaming industry. A look into the UK's gaming sector will help us to understand that why the video gaming sector is important and rising. According to the ERA report, UK gaming sector is worth almost £3.9 billion, and this accounts for more than half of the entire UK entertainment market of video plus music combined. There has also been a gaming explosion in the Southeast Asia market in the past, and this is attributed mainly to a fast-growing middle-income population. Just take for example, Vietnam has about 45 million online population and more than 31 million of them play online video games. That's nearly 70%. So next we'll talk about the rise in mobile gaming. In 2018, mobile gaming revenue reached 70 billion, account for 51% of the global games market, and is predicted to continue to rise to 59% by 2021. The mobile gaming industry is expected to reach 106 billion in revenue by 2021, and this represents an increment of more than 730% over the past 9 years. This incredible rise of mobile gaming can be attributed to the rise of ownership of high-performance smart devices over the past decade. So thirdly, digital distribution, which digital distribution has been ongoing for a while with PC and console gaming. With the coming of age of fast and stable internet connection worldwide, more people are able to access to digital distribution of games. Digital distribution also bring about several advantages such as convenience, where a player can purchase and download any games at the comfort of his home or mobile phone instead of traveling to a physical shop to purchase the disc. Players also gain access to a huge range of games and even old games which are normally not found in retail stores. More importantly, digital distribution eliminates packaging, saves space, and reduce waste and thus reduce costs for the game producer. Next, the subscription model for video gaming. More games are also moving on to the subscription model similar to Spotify for music and Netflix for TV contents. In the past, game producers create a game and will only collect sales and proceeds at the launch of the game before moving on to produce another new title. With different game subscription model now, whether it is monthly subscription fee for many games or in-game purchases, this will provide a more stable income for the game producer. And lastly, the rise in popularity of esports. So in 2019, this will be the first billion-dollar year for esports. Global audience is set to surpass 450 million in 2019, a 15% increment from 2018. To state an example of how popular esports is, it is estimated that there was 43 million viewers for the final of a game named League of Legends versus the 7th leg of the NBA final, which recorded 31 million viewership. Such is the popularity of esports. Major sports leagues such as NBA, NFL, and ESPN have jumped onto the bandwagon by partnering with the video gaming company. So, how can we invest into the video gaming industry? First, we can buy into the traditional big video game producer, and I've listed some names, and in the table we can see the company's market cap and also the analyst call and the average target price. And these four are namely Take-Two Interactive, TTWO, Electronic Art, EA, and Activision Blizzard, ATVI. These are all listed in the US market. And also, lastly, Ubisoft Entertainment, which is listed in the Paris, France market. Next, we will look into the two chip maker, NVIDIA and AMD, who will definitely benefit from the growth of the video gaming sector. With the rise of esports and video gaming, demand from PC, console, and smart device will continue to increase. And as the industry leader in chip making, demand for their chip product will continue to grow. These chip makers are also innovating continuously, and this can be only good news to the gaming industry with the production of better and faster processing chips. For instance, in July, AMD released its Ryzen 3000 series to a critical success on all fronts, while NVIDIA is looking to launch a next-gen GPU in the early 2020s. And lastly, for investor who is interested in buying into video gaming ETF, you can consider both the GAMR and the ESPO ETF for a more diversified option into the gaming industry. So our newest US offer is our US 880 flat rate promotion. If you are a prepaid account holder, you enjoy a flat rate of US 880 for each of your US stock and ETF trades. Promotion is valid till end of the year. So for a better understanding of this new promotion, you can visit our Phillip website or call your local account representative. All new and existing customer, you will enjoy complimentary live price quote for the US market. We also provide complimentary live pricing for the Hong Kong pre-IPO, Japan, Thailand, Malaysia, and Indonesia market. Clients simply has to subscribe the live price for your Poyos platform. You can always contact your trading rep to understand more on live price subscription. So also, please take note of the end of daylight saving time this month. So for the UK and Euro market, you'll start trading at 4 p.m. Singapore time and end at 12:30 Singapore midnight. As for the US and Canada market, the daylight saving will end this week, and you will start trading at 10:30 p.m. From next Monday onwards and end at 5 a.m. Singapore time. So now I will pass the presentation to my colleague Ming Jun.
Okay, thank you, Allan, for the presentation so far. And right now I'll be touching on the Brexit, which Allan has actually mentioned. Okay, what do we know so far from Brexit? Okay, so initially the Brexit was scheduled to take place on 29 March 2019 after Article 50 was first launched, okay, by then Prime Minister Theresa May. Okay, but it was followed by 3 delays. Basically, on very first one was actually on 12th of April, and then the next one was on 31st of October 2019, which is tomorrow, which is supposed to be tomorrow, but this has since been postponed again. Okay, a new deal was crafted on 17th of October in 2019, but it was rejected by UK. And then because of the tight timeline, so the Prime Minister Boris Johnson have to actually request for an extension. Okay, just for your understanding, most of the deal is actually pretty much the same. The main change is actually the Northern Ireland proposal. So there was this controversial backstop. Okay, basically it's just the Northern Ireland issue that they were looking into. Okay, so now they have removed this backstop, and then now Northern Ireland will instead remain a part of the UK customs territory, and so it will be included in any of the future trade deals struck by the government after Brexit. So as we all know, the latest extension given by the EU is actually to 31st of January 2020. Okay, so this extension was because Mr. Boris Johnson actually was required to request for an extension, even though he pushed so hard for the Brexit, because the Parliament didn't agree to the Brexit deal in time. That's why there was this bill that was passed previously that requires him to actually request for an extension. And so right now, the latest Brexit date will be 31st January. And of course, this date is actually still flexible, meaning the UK could actually still leave before the deadline if a deal is approved by the UK Parliament. Okay, there is also this proposed GE, the general election by Mr. Boris Johnson just on Monday, actually 2 days ago. And it was actually initially rejected. But now it has been confirmed today that the general election will be held on the 12th of December. Okay, so for those that are not sure, why is there actually a need for general election in the UK? Why did Mr. Boris Johnson want an early election? Okay, the next election isn't due until 2020, but the Prime Minister wants an early election to try to restore his party majority. Right now, if every opposition MP voted against the government, right, it will lose by 45 votes. That is why it's actually very hard for Mr. Boris Johnson to actually push through his Brexit agenda. Okay, so of course, early election comes with risk lah. So he will hope to win more seats in the House of Commons to make it easier to deliver the Brexit. Okay, and the main thing was the Labour Party actually backed Labour Party, which is the main opposition party lah. So they actually backed the early GE, which makes this happen on the 12th of December. Okay, so what will happen? The Parliament will be dissolved 25 days before the election date. And if Mr. Boris Johnson managed to regain the majority of the Parliament, it will then be easier for him to push through his Brexit agenda, and the likelihood of Brexit happening before the 31st January will be much higher. Okay, but in the meantime, the next 3 months will be actually very crucial for the UK Parliament to actually scrutinize and amend the Brexit deal with EU. So we can expect much more volatility going forward. Okay, but as the Brexit becomes more certain, we can expect the higher likelihood that pound may actually continue to strengthen, which will actually be an opportunity for investors to consider. Okay, the next 2 slides I'll be sharing on how the FTSE performance is. Okay, you can see this is the year-to-date performance of FTSE 100. Okay, it's generally sideways in the sense that in the near term, right, it was actually sideways, it came down, but generally not a very big movement as compared to the gains that we are seeing maybe in the US. For the pound, this is the pound to Sing dollar chart. Okay, what we are seeing here is that in October, near the time where Mr. Boris Johnson struck a deal with the EU, pound actually rallied quite significantly, about 8% then. So this 8% gains is just in terms of currency strengthening. But of course, there was this part that it came down. And also, in fact, right now it's still relatively flat. It didn't really come down much, even though Brexit was delayed. So, I mean, if the deal is more or less, I mean, more certain in the near future, right, we can expect pound to continue to strengthen. And this will be actually a very good opportunity for us to take part and probably get some gains in terms of the currency side first. As in equities, if you buy equities, the pound gains, your value of your shares actually increases because of pound to Sing dollars exchange rate. Okay. Next, I will be sharing with you on some ETF ideas that you can participate in the UK. Okay. So for those interested in to have some exposure in the UK market, can consider these two ETFs. Okay. Like I say, a rising pound is actually good for you. Okay. Of course, you have to go in first to take part in that. So the first one will be the iShares Core FTSE 100 ETF, which is ISF in UK. One of the largest market cap, and also very long. It was incepted very long ago, and there is also a very healthy dividend yield of about 4.6%. And the next one you can consider is actually the iShares UK dividend, which is the dividend yielding ETF, which is very attractive at 6.68%. Also, it has a long history. Both of these also have very low expense ratio. Okay, so that is actually all that I have for Brexit. And for investors who are interested in finding out more information, you can actually visit us at our Stocks BNB website, which is actually researched by our research articles posted by our research analyst. And also there's also the market journal where you can find more articles, okay, for your understanding and reading, okay. And of course, you can talk to us and email us if you have any other queries. Okay, for now I will be moving on to the technical analysis. Okay, so we have some TA questions that Allan actually just now was asking, so that I'll be presenting to you live. Okay, as you can see right now, this is our Poems platform. Okay. So the first one that I'll be sharing is MSFT Microsoft. Okay, this is our Poems 2.0 platform, which has the technical analysis feature, the charting feature that you can use. One moment. Okay, right now you should be able to see the chart. Okay, so apparently there's a recent break of the all-time high. Okay, so this is actually a very good sign. Higher highs and higher lows is basically just an uptrend, and it has been on an uptrend for quite some time. In fact, let me just take a look here. Okay, I will draw some. Okay, right now we are seeing is the exponential moving average for two lines here. I think it should be the 50 and 100 days moving average. Let me just take a look. Okay, but previously for the past 3 months, it's actually pretty much sideways. But if you take a look, there's actually a very slight uptrend. Let me just draw a trend line here. Sorry, just give me a moment. Okay, you can pretty much see that it's actually still sloping upwards. So we are not even, if you talk about that, you can see multiple points being touched here. This is a pretty good trend line to follow. Okay, if you take it even a longer one, this would not be pretty much not so good of a trend line. We take a shorter term one, which is the past 3 months. Okay, but we can also clearly see that there is a resistance at this point here. Okay, at 141.50 thereabout, there is this resistance which was broken just 2 days back. So we can expect maybe it will come back to test this and then rebound off, possibly, if the markets, general markets are still good. And all these will still be subjected to macro environments. Okay, RSI is proving inconclusive. You can see that it's still actually not overbought. Okay, and of course 70% is the overbought region and 30% is the oversold region. Okay, so very clearly this will be a trend line that I would like to follow. If it comes back here, probably it will be quite safe to actually look into entering. Okay, the next one I'll be sharing, I'll just be sharing with you three because we still have the Q&A session as well. So the next one is just one moment. Twilio. Okay, this one is very clear that it's very different from what I've shared on Microsoft. Okay. In fact, the past 3 months is very clear that it's a downtrend. You can see that the moving averages crosses below. Okay, this is a clear sign that it's a sell indication. Okay, let me just draw. Sorry, let me just draw a trend line again. This trend line is quite easy, and it's actually very, very nicely held there. Okay, so 3 points here: lower highs, lower lows, and definitely we are looking at a downtrend that is likely to continue. Okay, we don't see any support. Let me just in fact zoom out even a bit more. Okay, so possible support points that we can look into maybe here. I'm looking at these two tops for support region over here. Okay, of course this uptrend is no longer valid because it has broken down, so we don't look at the uptrend anymore. In fact, there may be more downside to it, but this is just purely on technical play. Okay, so we need to understand that. Okay, let's go back into the shorter time frame. Okay, so like I say, very clear. The moving averages has crossed down. Downtrend is intact, especially this candle confirmed it. Okay, so can see that the RSI, right, even though there is but this downtrend is pretty much very strong, so I wouldn't actually advise you to buy at the oversold region. So if you're looking to buy, then probably at that this kind of level, probably you can look into it. Okay, so that's for Twilio. The last one that I will be presenting on, Ford Motor. Okay, very simple. Resistance and trend lines is actually quite sufficient. In fact, of course, there are a lot more other indicators that you can look into. But for now, if not, I can go on quite a long while if I keep on introducing new indicators for you. Okay, for this, this is a 3 years chart. Also doesn't look that fantastic. In fact, this one from the beginning of this year, it has been on a downtrend. This downtrend is not as a clear cut as that. I will probably take these two instead. Oh, shit. 1 moment. Sorry, this is not this is 3 years. So in fact, from the beginning of last year, it has been on a downtrend, and we are coming to 1 year and 10 months, and this is likely going to be a pretty strong downtrend that we can expect. Okay. So this one, if you put a weekly chart, it may seems like just a false break. Okay, so these 2 points likely will hold, and the outlook in terms of the automobile sector, I believe, isn't that good as well. That is why this has been coming down. Okay, for support region, this one we can expect a small support over here, multiple points touching here. But it has broken, so may not be that strong. It's just one particular point that we can look into. Let me just go into this year alone. Okay, moving average cross down again is not a good sign. It's again, in fact, it hasn't really broken back up. So we are still in a downtrend likely. Okay, for the near term, we are still looking at a downtrend. So in terms of if you are holding it, if you want to take profit, this trend line may be a point where you can actually look into taking profit. Yeah. So that will be all for my technical analysis for today. And right now we will be starting on the Q&A portion. Okay, so I will be moderating the Q&A. Just give us a few moments to actually. Okay, so there's the first question is, may I know where I can view the video recording after the presentation? These will actually be uploaded on our YouTube channel. Okay, probably in a week's time or so. You can actually find our YouTube video. Okay.
Okay, I believe that some of you are asking, like example, whether the rate cut will indicate a higher stock market. So I believe that the market is already trading at near high. So likely it has already reflected the result of a likely expected rate cut for tonight. So in order for the market to continue to break the recent consolidated range, Fed Chair Powell must indicate that there is still more room for to increase to cut rate or even increase its balance sheet. So if Fed Chairman Powell indicate that this will be the end of the mid-cycle rate cut, and then market might we will see a very volatile market for the next few days. And because Friday is also the non-farm payroll, so we definitely have to pay attention to the result and see whether employment strength is still strong this month for the market. So someone also asked what does expansion on the balance sheet by the Fed means? So this simply means that the Fed is buying assets such as the US Treasury, securities, bonds, which also means that this means that it's increasing the money supply into the economy. This is widely seen during a decade ago, the 2008 and 2009 crisis, where the Fed has to buy into these mortgage-backed securities and increase the money supply and hold up the economy. So recently, the Fed is cutting rate as well as increasing its balance sheet to continue boosting the US economy due to the uncertainty in the US economy due to the US-China trade war.
Okay, one of the questions is actually majority does not mean increasing his chances of a Brexit deal approval. His own party can disagree or they will vote along party lines. Okay, so it is true that majority doesn't increase his chances of the Brexit deal approval. Okay, but it actually will help him in terms of having the agenda aligned with the parliament, okay, with his own government. Actually, in fact, if you have a general election, those people that vote for him, right, will likely support his deal. That's why they will vote for him. Okay, so there's a risk involved, like I was mentioning. The risk is that if the majority still does not actually side with Mr. Boris Johnson, then there will be, of course, surprises along the way for Brexit again, and we may even see an extension to the Brexit deal yet again. Okay, so after all, it may not happen on 31st of January. Yes, so that is for that.
Okay, I saw someone asking for the ETF for gaming again. So the code is GAMR. and the other one would be ESPO. Both these are the most popular traded video gaming ETF in the US market at the moment.
Okay, so we have actually come to the end of our presentation, and with that, thank you for attending this tonight's webinar, and we'll probably have another webinars in another 2 weeks or a month's time. Okay, thank you. That'll be all.